All right, hello everyone. It is 10:25 p.m. on Tuesday, January 23rd, 2018, and I hope everybody is doing well this evening. Um, I am making a video. Well, this news is about 24 hours old now, but uh, as I've mentioned before, the purpose of me doing these is I really don't like making a lot of preview videos because I don't necessarily want anyone taking trades off of anything I make here for videos, because I'm not always right, and if I'm wrong, I don't want somebody feeling like I gave them some trading advice, when that's not really what I'm trying to do. Basically, the purpose of these videos is just to try to impart some analysis and also to help those that care to watch to understand the importance of not only a technical system, but more importantly, how the fundamentals drive the market. And regardless of what technical system you're using, you need to know the fundamentals. You don't have to be an expert, but this is what drives the market. So, and it's interesting. I get emails from my brokers, obviously not just to me, just ones that they send out. And whenever there's, a lot of times I'll get it at the beginning of a week, and it'll say, here are the high profile, high volatility things on the news calendar coming up this week. And, you might want to not trade during that time, or you might avoid the volatility, or stuff like that. And I always get a laugh when I look at that because those are the times when you should be looking for trades. Now, it doesn't mean that you will, because sometimes there's no trade, even if it is a what they would consider a red level event, on your economic calendar. If it's red, it doesn't mean anything necessarily, but those are the times when at least you should be looking. But the reason why they say that is because people don't understand the fundamentals. They're just trading off what they see on the chart, and so they get blindsided, and because they don't understand how the fundamentals fit in, and that's ultimately what drives prices, not technical patterns. Technicals are important. I use them. I use Elliott Wave, as I've mentioned, because I think Elliott Wave is by far the best technical system out there, because it's not just a technical system or pattern. It's a forecasting tool, and it's very accurate once you know how to apply it. So, anyways, yeah, I always get a chuckle over those broker emails, because what they're basically telling you is, well, just trade during the off times. Well, during the off times, that's probably when the market's not doing anything. It's moving sideways and choppy, and unless you're going to be scalping on a 5-minute chart, I'm not so sure those are always the best times to trade. Now, trends can continue during those off times, but those trends are initially started or ended during these high volatility events. So yes, you need to be careful in terms of your position size and your stop loss, but the biggest thing is just make sure you understand what the market's looking at, what it thinks is important, and whether it's worth taking a trade based on that and on your technical system. So that's just an aside. But last night, about 24 hours ago, the Bank of Japan put out their outlook report, their monetary policy statement, and then they had their press conference a few hours later. As expected, they did not change the interest rate. They still are running on negative interest rates, but they did not change that. So, the Bank of Japan by far has been the most dovish of all the 8 central banks, okay, for a long time, several years. They've had the largest quantitative easing and buying of their own debt, and just pumping money into their economy to try to spur growth and drive up inflation a little bit, and just it's, you can have all the discussion about quantitative easing, but it is what it is. That's what they've been doing, and they have been by far the most dovish bank in terms of cutting rates. Obviously, negative interest rates. No other central bank has this, and just the amount of money they've pumped into their economy to try to again spur growth and investment, but also to try to drive interest. And so recently there had been some hints on the wires and from some of their statements and from some of their bank members that perhaps maybe they might start easing off on the quantitative easing, and pumping money into their economy, perhaps, as time goes forward. And so, of course, anytime the market hears something like that, that's considered very hawkish because that means they're seeing inflation and they're seeing improved economies. And so that's taken as very positive for the currency and causes the currency to strengthen. Okay, just like when they when they raise interest rates, that's the same thing. That's generally bullish for the currency. So, quantitative easing and being very dovish, having negative interest rates is completely opposite of hawkish. It's very dovish. It's very bearish, and it's what they do when they have real concerns about the economy. So again, there have been some hints about that in the recent past, and so the market basically had taken it as positive, and that's why we've seen pairs like the dollar yen just continue to be hammered over the last many weeks. But there was a question about whether that the market had basically had overreacted, and is the Bank of Japan really considering easing back on their quantitative easing program and their debt spending in order to try to spur their economy. And so that's really what was being looked for in this report. And so if the bank had put out anything in here that would have been construed as hawkish or bullish, about easing off on their program, then that would again continue to drive up the yen. Okay, and if not, then if everything was coming out basically status quo, then the yen probably would back off and soften a little bit. And nobody expected that it was going to be more quantitative easing. It was either they were going to continue to hint they were going to back off, or they were going to say we're leaving everything the same and we're not changing anything, which would probably be taken as negative for the currency. So so that was kind of the background. So just jumping in, this was the article that was when the news came out last night on Forex Live. And if you go to Forex Live, you can still find this. If you go to Forex Live, go to the central banks link. It's no longer on the recent ones. You have to just click central banks and scroll down, and you'll find it not too far down. And this is what it's called: BOJ announced no change to monetary policy. So of course the headline, you'd see that and say, oh, no change to monetary policy. That means that's going to cause the Japanese yen to sell off. They're keeping their monetary policy steady, which is really was what the first bullet point here was. And these are all bullet points from the actual statement and the quarterly report. And I'm not going to read through all these. They're basically keeping their CPI forecast the same. But this line right here is an important one. BOJ raises assessment on inflation expectations. So what they're saying is, we're more confident that inflation is going to pick up and eventually get to that 2% target that they want. And that's the market took that very positively. And let's see. The rest of this, inflation likely to continue increasing towards 2%. CPI is accelerating but remains weak. So, really, the rest of this and saying that they'll probably get to that 2% level next year or the year after. So, when you read this, it doesn't really sound very positive. I mean, it sounds like they're going to kind of keep everything the same. Nothing's really changing. Their forecasts are about the same, maybe a little bit better in terms of inflation expectations. But I think those couple little lines here and some of the wordsmithing they did kind of drove the story, and because the rest of this really is basically old news. And so again, the market was looking for something to say, to pull out of here and say that that they are at least expecting higher inflation down the road, and that things will be improving. And so I think those are the kind of things the market concentrated on when you look at the what it did. Okay, so I'm not going to go through all the charts, but I'll just show you a couple of charts here. So in this really goes across the board for any of the yen pairs. This is my demo account, but like I said, I did take these all on my live account. So here's the Kiwi yen. This was when the news came out last night, and we saw the market immediately go down. As the yen strengthened, then we pulled back during the late overnight session, and then it continued down. Now we're correcting and going down again. And it's pretty much across the board. All the yen pairs pretty much look the same. Okay, there's nothing really unusual here. U.S. yen has continued to sell off, and that's pretty much the story. That the yen was indeed strengthening, and the other thing about the Japanese yen is, and I'm not going to get into a lot of that tonight. In fact, I'm not going to get into it at all, but the Japanese yen is what they call a safe haven currency. So it can be a tricky currency to trade, because what it means is that if you have ever heard the risk on, risk off, or safe haven, basically when the market is jittery and the forex market is jittery and maybe is unsure about what's going on in the U.S. or anything going on in the world, investors tend to go to invest in the Japanese yen as kind of what they call a safe haven currency, and that's because the way the Japanese government and the Japanese public holds their debt, it's considered a very safe currency to invest in. So, which is very different than any other currency, really. So sometimes it can be tricky to trade on normal news events that don't involve the yen, but you can see the sentiment change very quickly. Something could come across the news wire during the day where, maybe something with South Korea or whatever, and maybe the dollar was going up before that, and all of a sudden, some bad news like that will come out. The market gets nervous, and all of a sudden they'll sell off the dollar yen because they're strengthening the yen against the dollar. So that's that safe haven, risk on, risk off. When the risk is off, meaning investors are not feeling so much like they want to take risk, then they'll buy the yen. So that, of course, that'll cause these yen pairs to go down. When there's risk on, that means they're feeling more confident about taking risk in the market, and they generally will sell the yen and go invest in more risky currencies or the other more risky instruments. And so you'd see pairs like the dollar yen rally on that case because they're selling the yen. So again, it gets into the weeds a little bit, but I'm just mentioning that because the yen can be a tricky currency. But again, this report was obviously based on the yen, so I felt pretty confident. From an Elliott Wave standpoint, I think the Aussie yen and the Kiwi yen had probably the best patterns going into the news. So this was the Kiwi yen on the this happens to be the 1 hour chart. So leading into the news, we basically had this, and that's pretty much what we saw. 1, 2, 3, 4, 5. Market ended the trend, and then we saw the sell-off. And I'm trying to see if we can get a better picture of it here. Well, that's about as good as it gets. But I think the Aussie yen had the best of all those particular moves prior. So if we zoom out here on the Aussie yen, here's the daily chart, and you can see I've got this labeled already. And we have a perfect 5-wave trend in place. 1, 2, 3, 4, 5. If you measure this, so let me do that. As I said, a lot of times in Elliott Wave, it's not a hard rule, but it's a forecasting tool. Wave 1 and Wave 5 are usually about the same length. So in this case, you've got about 190 pips, 188 pips, something like that on Wave 1. And then Wave 5 is, again, 188, 190 pips. So that was, so going into the news, the red arrow was the trade I took just before the news came out, and I felt very confident just based on this pattern that this was going to go down. And if you look at the Aussie yen, you know, let me try to find it something else here. You know, here it is again. I mean, it just looked like it was ready to go down. 1, 2, 3, 4, 5. This is on the 8-hour time frame, and so that I felt very confident. Now, as far as the target on this goes, I'm thinking we probably will see this come back to, I'm thinking probably somewhere around this area right here, because I'm thinking this is probably an ABC. So we'll probably see like A and then B and then C. So the minimum target would be down here. It might actually come down further than that. I mean, if you use a Fibonacci on there, 50% retracement takes us all the way down to here, which would be a lot of pips from where it started. That's 200 pips. So again, we already kind of had the pattern in place, and so I think that's that was a gimme. So the patterns, especially on the Aussie yen and I think pound yen, really suggested that it was going to go down. But the fundamentals are really the important thing here. And if you go back to Forex Live under that central bank tab and you scroll back to before the news came out, you'll find stories like this that were posted. And here you'll see, you'll get to read some of the previews that like some of the major banks and investment houses were talking about, how they envision what the news was going to be. And basically, I'm not going to open any of these. You can go and read them. But basically what they all said is, look, we're not expecting any change, and that things are still status quo. And for the most part, that is how it came out. But yet the bank still threw a couple of bones to the market to still suggest that things are improving, and that down the road we might see some backing off on the quantitative easing. So like I said, guys, ultimately that was positive for the yen, and we saw these pairs sell off. And I would expect that we'll continue to see selling, for a little bit longer here at minimum. So, and I'll be watching these patterns for any signs of completing. Again, the Aussie yen to me is one of the most clear ones. If you go down to the current pattern on the Aussie yen, it looks like, we have a 5-wave trend pretty much completing here. 1, 2, 3, 4, 5. Although this 5 is a little short, I do anticipate this will go a little bit further. So it's about the same length as wave 1, but as you can see, it's running into support here at this low. So but that doesn't mean this downtrend's over. It just means, once this is over, we'll see a correction back up, and we might see this continue, because ultimately I still think this is going to come down to at least this area. So I think this selling on the Aussie yen will go on for a while, and I think in general the strength on the yen will continue for a while. So anyways, guys, so that's it. Don't want to beat the dead horse again. The whole purpose of this again is just to tell you to stay in touch with the fundamentals, know what's coming up on your calendar, do a little reading and research. You don't have to be an expert, but just kind of know what the market's expecting and what it's predicting, and so that if there's a surprise in that, you know how to, you can take action, hopefully make some pips, and use that in conjunction with a good technical system, to help you visualize your entries and exits. And that's really all you need to do. And like I said, I use Elliott Wave, and to me this could not be more clear in terms of, this is a picture perfect textbook Elliott pattern, so trend. And so that based alone, I probably would have taken a trade, but the news just helps time when I'm expecting it to move. And so that's the beautiful thing. You just line up the pattern with the economic calendar and you just go for it. So anyways, guys, so that's it for the rest of the week. We've got a few good things coming up. I'm not going to really talk about them so much here, but tomorrow morning, early London session, average earning index for the British pound. I don't think that's going to do much because, again, everything's focused on Brexit, but might be worth a look. Then late tomorrow afternoon, in the late New York session, we have Kiwi CPI. That could be very important. CPI is an inflation number. That's always an important thing for a central bank. So I will definitely be watching that. And then Thursday morning is the other big event for the week, the European Central Bank rate decision and press conference. Always a wild time when Draghi is speaking, and whipsawing market. So I generally do not take these trades until after the press conference, when once he's done talking, because you can see a lot of whipsawing up and down while he's talking, because they're not expecting any change in the rate. So again, if there is a trade, it'll be at the press conference 45 minutes later. At the same time, we've also got core retail sales out of Canada. That could be important. That's around the same time the Draghi press conference starts for the ECB. And then on Friday morning, we have preliminary GDP for the pound. Again, could be important, but in the Brexit scheme, I'm not sure. But this could be important. GDP is a very important number for an economy. And then Canadian CPI on Friday morning. I think that will be bigger, and that will probably be more important than the retail sale number on Thursday, because again, this is an inflation number, and the Bank of Canada is watching data very closely. So I think this will be a good one to watch, and a good way to end out the week, maybe, if the patterns are open. So those are the ones I'll be watching the rest of the week, and I do expect to get some trades out of those. So alright guys, so sorry for the long video. I hope you enjoyed it. Share it, pass it along, comment, like the channel, and we will talk to you soon. If you have any questions, let me know. Talk to you all soon.